Hello, everybody, and welcome to the Plus3 Futures and Commodities Show. This is the March 12th edition. It's Saturday afternoon. My name is Ben Maldonado. I'm here with Barrie Hederachi, and we are ready to roll and review markets. How you doing, Barrie?
I'm ready to go.
There's a really interesting story that the charts told me this week, and I'm excited to tell everyone about that. And I'll wait until we get into the commodity section to do it. As always, let's start with Bitcoin, the risk proxy. Not a lot happened this week. We're still stuck in this contracting triangle, fourth wave type formation, but the bias continues to be down. And as a proxy for risk, I think it just shows that the path of least resistance is still down. With Bitcoin this past week, we had a 1-2 day wonder here where we tested resistance right in here. The resistance we're talking about is in the 42,400 area. Tested it, failed, and we're back in the triangle. If the pattern plays out and we stay below this resistance, we should break to the downside. I was looking over here, I have this timing up top, this 70, 69, 140 days, calendar day cycle. And I was looking at this last run from the high and noticed that we were in a similar pattern of the triangle. But what did we do here? We had a false break at the low, and that sort of set up the pattern to go back up again. So one of the things we're going to be watching for here is when we come down and challenge these lows, if we do create a false break and we are at this, early April time frame, it could be a decent setup for a long. But it's a long way to go till we get there. We have to see how heavy it's acting. It's sort of looking like it's not going to do a false break, but it's going to take it out, and head down to this full square in the 24,600 area. What are your thoughts on Bitcoin this week, Barrie?
Well, I think, long as it's below that square, obviously it's in a bearish stance. And I just noticed if you duplicate that upper line and you move it to that last week's high, it lines up with that high in January. It looks like anyway.
Which
and
one here?
That
This
would
one?
tell us that it's contracting even more.
And where do you want me to line it up with?
No, just pull it down to last week's high.
Last week's high. Right
and
there.
I'll back it up a little bit. See how that lines up with the January high there?
Yeah, nice.
So to me, that looks like, and if you do it at the bottom to last week's low, it lines up with those lows in January also. So we're definitely in some kind of a compression. So, getting closer to a breakout, I suppose.
Yeah. Yep.
How that goes.
But I mean, it's until we get above this square, the ponderance of evidence is to the downside.
Yeah.
So,
yeah.
Let me throw it over to you. Let's review the big five, and then we'll come back and we'll talk about the commodities and the developments we see there. How'd you like that close on Friday?
Oh God, I watched it all day.
That last hour and a half was pretty rough.
Yeah. But, if you're watching us, following us on Twitter, it was perfect. We had a fuse line at the highs, near close to the highs, just, reversed off of that and never looked back. Let's take a quick look where we stopped last week. So 42.75 was the key level to watch for a balance. If we can hold above, if you can break above and hold above it versus, holding below it. And if it's below, we were saying that the markets are going to be on a weaker footing. And, through the week, it was based, other than that little, I wouldn't even call it a false break. I suppose it was kind of a false break early Friday morning. Other than that, we were mostly below 42.75 for the week. And that paid off pretty well.
I was calling it the Putin push. Remember, because it said Putin thought the talks were going well and the market went crazy.
That's right. Yeah. Well, hey, whatever it takes, man.
Right.
But I'll tell you what the Putin push did. This is the 4-hour chart we've been following ever since this low came in.
That's been fantastic. Absolutely fantastic.
Super helpful. because you can see how we shifted to the downside last week, and then after this, the put and push that went right up to the line, right, and reverse. So now we're just basically back and forth between these lines, and the equidistant. Earlier we were on top of it, so now we're here. Anyway, I post these at least once a day on Twitter, so you guys can follow that.
Where's your lower line now? About 41.90, it looked like. Or 75.
41.75. Yep. Yep. I mean, it could go a little lower because these other lines are, what I do is just let the market kind of set up the really around 41.5, I would say would be the
41.50 looks like the limit there.
All right, going back to the daily chart. So last week was fairly simple. Look, we basically just bounced between level lines all week. 42.75 was the key level, and it's going to continue to be the key level till it's taken out. To the downside, we have support around 40.75 based on the square of 90. And if we take that out for some reason, then the next stop would be around 38.95, 38.96. That's the next big stop, right? If we take out 40.75, 38.96 is the next stop, especially if we get sort of stuck under 40.75, just like we got stuck under, here, we got stuck under, 44.50 right there. So if we break below and really can't get above that, the next stop is really down to 38.96. I just wanted to lay that out so we have those levels in place.
So if we lose that 41.50 area, it's like 100 points before the next support.
Just straight down, yeah. Not much in between. And where I got that was, looking at the weekly. I hope this is not getting too crowded, but remember, this was the square that we drew up, calling that to be a decent correction, right there. And those lows are kind of getting stalled right at that, the boundary of that box. And the way I got the other two were, 38.96 is about 1.5 of those. If we go 2 down, that would be, 35.70. Figure 35.75, and which could happen. But right now we're 1 down, so we really have to watch this because it's possible that we get a little bit of a relief rally off of this. And
this sort of emphasizes what we've been talking about too, about how the market feels heavy. We're hanging around near the bottom of this box, and if you look back in the past, they kind of rocketed out of the bottom of those boxes.
Yeah, so we're not in that environment.
No,
for sure.
Right.
Those days are done. And the other interesting thing was, on the week, we've only had 2, 1 bar counter trends during this entire period. So it's still very weak in terms of that. And going back to the daily, I counted out these counter trends, and, we haven't had any more than 3 days up in terms of, how you count counter trends, not counting inside bars. So this is, just super weak. And last Friday, that was a one. So last week we had a 2-day counter trend and basically pulled back down again. And so it looks like this 40.75 to 40.50 right in here is going to be tested. If it does, we'll sort of get that flush that everybody's looking for. So that would be good. That will complete the 90 and give us some sort of a bounce. Again, if it doesn't hold, we're looking at 38.90, 6.95 area. That said, this area could be tested on an intraday basis or one of those London opening bases where it happens in the middle of the night. So you got to watch for a quick rush down into this area and then a bounce. And it could happen around the Fed notes or numbers. So just watch out for that. This is the level to watch for some kind of a break or a bounce, because that's right at the 90 level. All right. Anything you want to add to that, or we're good?
No, I feel the same way. It's just trading heavy, and it's like it's waiting for something. And maybe it's the Fed this week. Who knows?
All right, moving on to bonds. Last week, we talked about 160.20 being the key level for a major counter trend in bonds to hold. And we rallied right up to 160.20 almost, a couple of ticks. And then we sold off. 158 was the other level, the primary level we were watching, which, we said, if it's below that, it's really weak. But the major level was 160.20, and there it is. We banked, went right up into it and reversed. And now we're even below the 158 level. So looking for support around 153.20 now, which is the old level that we were using. And we could get, it's easy to see that I was getting stuck somewhere between 153.20 and 158, because that's where our key levels are. So keep that in mind. In the bigger picture, as long as it's below 158, it's definitely on weak legs.
I'm going to do a quick review of bonds too, because we talked about the potential short setup that did come to fruition there.
Pretty much the same story. So last week we talked about this 158.20 and 159 area was the limits of the upper boundary on the weekly chart. And the fact that the prior week we came up to kiss this line from below, and we called that to be resistance. Remember that? And you can
Good
see
call.
we pushed right up against that last week. Just couldn't do it. 160 line was right there. Now we had a 2-bar counter trend. You can call it 3 outside reversal over the week before that. So this is it's looking a little weak for now.
It's in a weak spot. Yep.
And those are the key levels. Same numbers we had last week. Moving on to crude. We call that this 135 being key resistance. And we got close enough. Well, close. About 130. Didn't quite make it to the square, and I think we might. We really didn't finish that up on I think it could get closer. So I'm still going to hold that. But I think for now, the key thing to watch here is, if you're looking for a counter trend, clearly this 97 is the, anything above 97, crude's in a very strong position. All right. And anything above 102, I think that's the secondary level. We'll take out this 107 now that we know where the range is. So this zone will be major support. It's between 100 and 102, right in there. And long as it's above that, I think we have a shot at checking out 135. But if we get below 100, then obviously we're taking out, we're getting under the 72. Then we'll have to set up another leg of a different type. But for now, long as we're above, 100, let's say 99 to 102, that's the boundary. It's bullish. And looking at the weekly crude, again, 90 up from, the big low from 2020 is right around 96, 97, 99. So again, any kind of a pullback holding above this 97, 98, 99, this area, we'd have to call that very bullish. So for this oil to be, really negative, I think we would have to get under 100. That's the way the squares look. And taking a look at gold. Well, we were looking for resistance up near the upper fork. And we looked at 2064. I think that was a 1/3 line here, and the half square was around 2100. We got into the ballpark, so to speak, and reversed. Now the key is to hold above this 72. So that would be, we dropped this little zone, sort of support box, I think last week, if you guys can see this. And that is the upper range of that is around 1962 to 1940. So 1960 to 1940 is key support. And long as we're above that, I think we're in good shape. And it's also above the middle fork of this, the middle line of the fork that we've been using for a while. So I think it's all on pretty firm ground as long as we're above about 1940. And I'll post that. I'll update the spreadsheet for that. Looking at the weekly gold, Well, here's our 2000 level. We were looking for a target for a long time. 2100 is, again, now we're back. We broke out of the big winding we've been having for months and months.
Hmm.
We talked about a fast move coming out of that, and looks like
We got it. Yep.
got that. Now the key is to, again, we had the levels basis based on the daily, on the weekly level, which is a little bit longer term. 1880 is a key level to watch that we hold above on any kind of a pullback. That would be the max support, right? So we could hold clearly above that, and I think 1919 is a good level also. So I would call that, just because of the volatility, I think we use that. So 1881 to 1990, 1919 would be
The support.
Yeah. So long as we're above that, I think we have enough juice to maybe go up and test the 2100 area. Next, we'll take a look at the dollar. Another item we've been bullish
Yeah. Yeah.
forever, and we look, dollar to be bullish above 97, and it has been. Pullbacks, the last pullback held on the quarter line. We're back up, and 99 was our next level of resistance. So we're stalling around there.
It's good structure on that pullback too.
Good structure, just 2-day counter trend and back up. So very strong. So really the next level is around 100, like 101, 102, I think is next level to watch for resistance if we can get through 99.
Yeah, the dollar looks good.
Dollar's been good.
Mm-hmm. Remains good, I guess, is the proper
statement.
There you go.
Just keep adding the lines and see where it goes.
Mm-hmm.
And the weekly dollar, just to take a look. And we added this one trend line a couple of weeks ago, and that was one of the targets. So we got there. 98 was a key level we were watching for a stall because it's 72 degrees up. Again, going back, if we can hold above these levels, near the square of 72, figure 98 or so being the lower boundary, it's still bullish. We can certainly go and hit the
half square,
which is around 102, 103.
And your weekly close was above the line too, so that was a positive.
So now we're getting into a new square here.
Mm-hmm.
But on these bull markets, we got to watch the pullback. So again, 98 would be the 98, 97, 98 would be the area to watch here, basis weekly. While we're here, let's take a look at the euro. We've been bearish this, and we made another lower low last week. And I really can't say anything other than
hello, full square.
Yeah, or hello, new lows.
Right.
So it's just weak.
Mm-hmm. Hello, parity.
Right down here.
Yeah.
Not too far. And the daily euro, here we go. So we did hit the, let's see, 1, 2, 3, 4. I had some kind of support here.
Mm-hmm.
0.080.
Mm-hmm.
We hit that bounce. We're coming back. So I would say, we're 144 down. So this is a level to watch. It's really, let's say 108, 108.50 or so is really the level to watch. And if we take that out again, then we get stuck under that 108. 50 area, and that's just going to be further weakness. I mean, look at this rally, couldn't even get to the half square. So, euros clearly it's weak.
And it even couldn't even get up to the previous lows, back in January, the January lows.
I mean, here?
Yeah, right.
Got there.
Almost got there.
But it couldn't get to the half square.
That for sure.
And what else? Yeah, I don't want to add a bunch of numbers here where I think we're good. We'll stick.
No, I think you framed it very well.
Keeping it simple. We don't want a bunch of options. So, all right, that's it for me. Let me put it back to you. Cover the commodities.
Yeah, there's a lot of interesting developments in the commodities. I'll talk about them first before we jump into it. Each week when I review the charts, it doesn't happen every week, but most weeks, like a story gets told, because as I go through the different commodities, the different markets, different sectors, you sort of can see money flowing and what the money is doing, how it's moving in the system.
Mhm.
And the message I was telling Barrie before we started recording, the message I got this week is that there's a deflationary short term. There's a deflationary wave coming. I don't know why. I don't know how. I don't know what it is, but and remember, we got to keep the bigger picture in mind. For commodities, bigger picture, the bull market's intact. You're looking at 2 to 3 more years, if the cycles we work with are correct, 2 to 3 more years of bullish markets for commodities. So what we're talking about here is a short-term sort of tactical move we think is coming. And every different commodity chart, almost all of them are telling me that the ones that have spiked recently, there's a short-term highs in place, and the ones that are correcting have corrected further and are looking weaker, so that there is money for whatever reason flowing out of commodities this past week. And it looks like there's going to be some sort of correction there, whether it's sideways, whether it's steep. We know that the bigger picture, looking at the monthlies and the big picture cycles, we know that it's bullish. So what do we want to focus on is, where can we find the support and areas to look for to buy these, provided that the decline is orderly and we can find the right spots to get in. So that's the bigger picture. I'm going to run through 4 or 5 different markets, commodity markets, and show you, this is the message that I'm getting overall.
Oh, that sounds good. Let me throw it back to you then.
Okay. So before we jump into the commodities, let's start with NQ. We saw Bitcoin being in a vulnerable position, which is, we use as a proxy for risk. The NQs was also the go-go market on the way up. We saw the crazy rise and, stocks going nuts there. It's led the way down, and it continues sort of in this channel and just sort of tunneling its way down. This week we closed under this half square, which is, in the 13,400 area. As long as we're below that, we're vulnerable to take out these lows that we made on February 24th and go down and test this full square, which is around 12,800. The story is the same. We're seeing lower lows and lower highs, a series of them. And as Barrie said, very weak, counter trend rallies, couple days, 2-3 days, and then you go back and make another low, 2-3 days, then you go back and start going down again. So NQs are showing that, it's confirming what we're seeing in the commodity markets, that there continues to be risk off. There's a sort of a deflationary type tactical move in the short term that's happening. Anything else you have to add on NQ? I know you look at some of the components in there. Anything to add on the NQs?
No, not really. I think just that, there's probably more to go. It doesn't look like it finished. And you have a full square below, and I guess that would be the next test.
Absolutely. That's the next shot.
And what's that level below?
It's around 12,800, 12,750, 12,800, right around there. That appears to be the next stop. Barrie talked a little bit about the bonds, and I just wanted to add something because I had it on last week looking for a short setup. We got the perfect move right into the half square, into resistance, and reversed off of that. So the short was set there. The key thing we're watching this week, we did lose this full square, which is, again, adds to the bearishness in looking at this market. Key thing we're going to be looking at is if we come down and test this trend line and hold, there's a potential that we could be doing an ABC up or some sort of bullish move up. So we're watching this market very closely, but as long as we're below this full square in the sort of 156.5 area, this market's bullish, and it looks like we could head, down further once we get through this half square to make new lows. So just watching in position, the setup was there last week that we highlighted on the show, and we got it. And so now we're just going to try and manage the position and make sure, it's not doing something else, like doing this sort of thing where it's going to, move higher on an ABC or some sort of move up. I know you covered bonds, so let's jump into the commodities. First one we want to start with is gold. Barrie reviewed it. Gold has had a great week. We were all over this with the series of higher lows and then higher highs coming in. And here we got the fast move we were looking for. The high came in on the half square. So that's to take note. We tested the half square, could not hold it, came down, have tested the full square and are holding it so far. As long as we hold this full square, which is in the, call it 1970, 1975 area, as long as we hold that, the bullish case is intact. If we lose this, we have to start looking at support levels here, which is around 1880. And then if we lose that, then it's back into the, where we were for 18 months, which is, the 1780, 1790 area. So we want to watch these areas to see if we hold and reverse. If we do, then gold's going to continue. Everyone says, well, why, if the market sells off and it's a risk off, why is gold going to get sold? Isn't it a safe haven? I think the thing to think about is that these commodities are going to get sold, including gold, as a way of raising cash. And, if we do get some sort of panic on the equity side or on the risk side, it's not that, the long-term trends or the long-term prospects of these things aren't good. It's just in the panic, everything's going to get sold in an effort to raise liquidity. So the idea here is watch these support levels. I definitely want to see it hold this one, in the 1880, 75, 80 area. But if we do get down there and can hold it, it's, back to truck up time for gold, because very constructive long term. Just have some concerns with this pattern and where the high came in, and some time counts that came into that. 144 is a very important number in geometry, and I saw 144s on different time frames and different commodities all over the place this week. So, and gold was one that had one. So it's just a little bit of caution short term. Continue to be bullish long term. Watch your support levels and watch it how it acts if it comes into those areas. Here's another one that we've been talking about for the last month or so. Copper gave us a really nice heads up by giving us all these higher lows, made a fast move. But look what happened once we made this fast move and broke out. We couldn't hold it. We made the high into the half square, reversed. This is a false break. No matter how you cut it, this is a false break. We're back into the chop here, so to speak. So we're going to be watching to see how copper acts at these two different support levels. One is the half square in about the 457 area. And if it gets down into the major chop zone, again, it's back into the 433. Long term, very bullish on copper. This is another market where 144s showed up in price and time. So expecting some sort of correction with the overall, sort of deflation wave that we're seeing in the short run, whether it's sideways chop or, a little steeper. Don't know yet. We just have to watch and see how it acts. I know you and I have been talking about copper a lot, Barrie. What are your thoughts here?
Well, it's the same as the other commodities. I think long-term bullish. It's just a matter of picking off the spots.
Mm-hmm.
And here we pulled back into really good support. So we'll be watching it next week. See how the price action looks going forward. But I like where it came down into. It's a half square. It's perfect.
Mm-hmm.
And now if it somehow gets under it, we'll have to wait and see. But as long as it's above it, I think it's on firm grounds.
Agreed.
Mm-hmm.
All of them are bullish long term. Remember, that's our view, where we really like the commodities. This is tactical stuff, and very important to, from a timing standpoint, to just watch this and see the price action to see how it's going to go. Is it going to be something big? Or is it going to be something minor? We don't know yet. We're just on alert, watching to see how it's going to play out. Barry talked about crude. I wanted to show the look here that I have on crude. It's a little different, but same kind of conclusion. We had this beautiful move higher, ended on this full square in about the 127 area, pulled back sharply, went a full square, down to this 104, 105 area. As long as we hold that, super bullish on crude. But again, had some 144 timing up here. It came on this half square of this big square that I've set, the 45. So the timing here marks a decent high. Again, with everything else and the sort of deflationary wave, are we going to see crude chop around and go sideways and just sort of burn off time before the next move? Or are we going to see a steep decline? We don't know yet. Right now, it's doing exactly what it should and if it wants to be bullish, which is holding this full square in the 105 area. I mean, we could even come down here, which is around 92, 93, and still be very bullish. So just trying to show sort of the anatomy of a move, right? We were looking at it. We were bullish in here. We saw these, series of higher lows and higher highs. And this is how a high comes in. So what kind of high, we don't know yet, but we're watching to see how this develops. I love the action, though, from top of the square to bottom of the square. That's a square working as it should, defining upper limits and lower limits, and gives you a good level or levels to trade against. So we're watching crude, same type of thing, very bullish longer term. Shorter term, there's some headwinds here. Here's coffee. Here's a soft. Bullish on this longer term. Just got to always be aware of where have you come from and, where are you in the move. This thing has been rallying since November of 2020. A beautiful move. We caught different legs of this, not the whole thing, but enough pieces to have a fond place in my heart for coffee right now. But here you see we've been stalling at this full square in the 250 area. First we came up, tested it, pulled back, went up, broke out, false break. Now we got stuck under it, pulled back, couldn't hold the half square, got under it, now tested the half square, lost it again. This is a market that's correcting. Coffee's still bullish. I mean, if you look to the left, as long as we stay above this 212 area, still very, very bullish. If we lose 212, then we got to see how it acts. Does it find support quickly? Does it keep, sort of ratcheting down different levels? But this is an example of a commodity that's had a hell of a run, and now it's time for a breather. No different than this run here. Then it took a breather for, almost 2 months before it started going again. So we're just going to let the pattern unfold. Just want to show again how these markets work, how they make highs, how they make lows, and how we look at them now that sort of we have a confirmed high in place. How do we know if it's the high or a high? Right now, the way it's acting, it's a high. But if we start losing these important support levels, it could turn into the high. What do you think about the coffee here, Barry?
Well, I think I agree with all of that. It's correcting and long as it's on firm ground, and we're looking for a setup to get long.
Absolutely.
So far it's correcting. So let it get there.
Got to let it play out.
Yep.
Last one I want to look at is one everybody's been excited about, and that's wheat. What a move. I mean, just stunning, right? But look at how the chart picked it up. And we had this. You're right. This is the move from, June, July of 2020, right? That was the low. Came up, tested this square, couldn't make it, held the half square, tested the square, couldn't make it, higher low, made it through this time, crisscrossed around it, then sat on top and then took off. The point being is there's time counts here. There's 144s here. We made this spike high, into a full square, pulled back, tested the bottom half of that same square, and now we're bouncing. What it's telling me is short term, the move's done. We have to see what comes next. Is it going to be a sharper correction? I mean, this thing could pull back all the way to here and still be very bullish. And that's like around 880, 870, this half square, and add an eighth on for the structure. It could be completely bullish and have that kind of pullback. Or it could just chop around in the square going sideways, crisscrossing it, or just, bouncing between the full square and the half square, and burn off time waiting for the next cycle to go. Still very bullish on wheat and bullish on these grains. Just know that it looks like something completed here. Don't think it's something super major at this point, but we're going to let price tell us over time whether it is or not. But this is, again, another example of how, we got on this thing last fall. You get this kind of move now, and then it tells you with geometry and the squares that, hey, maybe this move is over. I know you've been all over the wheat, Barrie. What's your view here?
Well, long-term bullish. And I like that half square right around, what is that? About 950 or so, under the 1,000.
Oh, under this one? Yeah.
Mhm.
Yeah, it's around 915, 916.
Okay, so I think long as we're above that, wheat's in really good shape, and you can just take your setups to the long side. The idea now is, are we going to do a quick counter trend, or is it going to be more of a complex counter trend? That's the key here. So we'll have to let price tell us that. But clearly above that full square, we can, if you manage a couple of days up and come back and start holding above that, that's definitely bullish. More bullish than otherwise. So meaning we'll get the next leg much faster. So
agreed. And that's in the 1,066 area. Also, all of these levels, the levels Barrie talks about, and the levels I talk about in these markets, and in addition to other markets that we're not even highlighting this week, they're all on a Google Doc spreadsheet that we post the link along with this video when we're done editing. You can just click on that link and catch all the levels. So that's all I've got for this week. Again, the message is maybe commodities are a little too popular right now. Maybe there's too much money going in or too much speculating, and so they need to wring some of that out. I don't know. That's a possibility. Maybe it's just some sort of risk-off liquidity issue that people need to sell them to raise money. But money this past week has been coming out of these things, and it looks like there's going to be some sort of correction here. So we're just giving you a heads up, bullish, bearish. We tell you the way it is. Longer term, obviously, we still like the commodities, but this is it's something that you have to take a sort of heads up and notice about it, because it's what the charts are saying. So this week should be super exciting in the markets. I have some major cycles hitting this week. Very interested to see the effects on the markets, and see if we get some sort of conclusion to all this chop, possibly. Who knows? We'll see. Where's your focus this week, Barrie?
pretty much on everything. I feel like a sort of like an air traffic controller here.
You got too many planes to control.
Yeah, there's so many things to watch.
Right.
But clearly, crude is one, and bonds and the S&P is the main focus for me, because they're all at key levels again, and so looking to see how we're going to break, especially after the news next week. So
that's
FOMC
right.
stuff.
Right. So rest up, everybody. It should be a busy, active week, and you want to be on top of your game. So have a great week, and you have a great week, Barrie, and we'll talk soon.
Thanks, Ben. Good job.
All right. Take care.
Have a good week.
Bye.